Reason number three is competitive advantage. So before we invest in any company, we have to understand that certain companies will have an advantage over the others, and as investors, it is our duty to find these advantage. So, for example, if there is an EV sector that is bound to have a good growth, then among the various companies that are present in this sector, you need to find like which company has this competitive advantage. And not just finding the advantage is not enough. You have to do other reasoning as well. For example, how long is this advantage going to continue for that particular company? Then can any big company, for example Reliance, come into your sector and kill you because just because they have a higher capital? For example, what happened with Geo. uh, is it possible that technological change happens in that sector, and because of that technological change your advantage is killed? And not just that, for example, can any government introduce any policies in this sector that can kill your advantage? And finding the advantage is not enough. For example, if you find an advantage and everyone around you also knows about this advantage, then your expected returns will be lower. So what you should ideally do is find the advantage before anyone else around you is aware of it, so that you can take the advantage of valuations. You will get that stock in a lower valuation. So can a common retail investor do that? So this could be a reason why you can avoid stock picking.